Hey, Steve and Andy, what's going on?
Hey, Scott. Not much. Happy Tuesday. Hello to you, Andy.
Hello, Scott. Hello, Steve. Hello,
Hopefully my
everybody. I'm Waleed.
yeah. Hopefully my oh, it reminds me. I got to get my questions panel out here. All right. Hopefully my gardener's not coming by. Usually, he likes to come by this time of day. But anyway, here we are. Trade of the week. Um, like Scott said, it will be recorded later tonight or early tomorrow. Will be dropped in July 30th. The old disclaimer, just reminding everybody, we are not registered investment advisors. We don't collect fees for managing people's monies and expectations and finances. If you're looking for that, you got to go seek out those guys who charge you a fee to do that. We're just going to talk about software. We're going to talk about a few ideas, a few notions that we see out there. Andy, myself, anybody watching live or in the recorded version can do what you like with that information. So let's get started here. Here we go. The old vibrant community of traders. You're not alone. It's a very intense program to learn, and we're trying every day to figure out how we can simplify it as much as possible. One of the ways is to offer open interaction with us, whether it's Barry's live trading room or whether it's the afternoon webinars that we do every day, and the Friday webinars, which is down there at the bottom. I helped Jamie yesterday. Tomorrow, Brad and Dan will come in and talk about some items. Jamie and Andy will talk on Thursday about what they're seeing in the market on Thursday. So a lot of interaction to come into these webinars, timely content as we discuss what happened during the day and how we might use trade ideas to try and benefit from it. Those are all in the afternoon. And then, of course, we have our TI University series, which is the mornings, 12 Eastern, Monday through Thursday. It starts with the basics on Monday with Sean and gets a bit more advanced throughout the week, finishes up on Thursday with Jamie and some pretty intense back testing stuff. So that's also a recorded version. You can find that anywhere you like on the, or you can watch it anytime you like is what I meant to say. But the Friday support sessions are a great place to tune in for live support. Every Friday we do it from 11 to 2 Eastern. It's not recorded like the others. We just encourage people to come in and ask questions. It makes no sense to record those because we go in 9 different directions. Anybody trying to watch it and figure out what the content is, we never really know. We just let you guys determine what the content is. And here's, as I mentioned earlier, the TI University, 4 separate classes that are live. We also have the recorded versions. And so we can get started now that the intro is out of the way. Man and machine combined, no man is better than a machine, or no human is better than a machine, and no machine is better than a human with a machine. So what they're getting at here, what Paul Tudor Jones is getting at here, is there is no golden goose out there. That includes trade ideas. If you're thinking that we're selling a golden goose you can turn on and go to work and turn your back on, you are under a tremendous misconception, right, Waleed? Waleed knows. He knows the market's a big bad animal, and we do what we can to try and use this technology to make sense of it. There's no way that anything is going to do everything for you. So man and machine, human and machine, as we go forward in our new, brave new world, it's what we're going to be experiencing in all facets and walks of our life, getting giant data sets curated for us and presented to us where we can make the decision the way in which we want to. We do that at Trade Ideas, both with the custom settings of Trade Ideas, and also the AI gives us ideas curated from a machine learning process. So across the board, the program has given us some great ideas. So the agenda for today is pretty simple. It's pretty formulated as we've kind of settled into the last few weeks. If the market hasn't changed, we'll just kind of continue to talk about the same stuff and try to drive some new ideas home. Market recap I'll do. Andy's got some observations as usual from the AI tool and what types of things we can glean from the AI, whether it's in an individual trade level or maybe a bigger macro level. Hello? What?
You got Roku up there. Shouldn't that not be Cliff?
It was
Better
bad.
change that for the yeah.
Thank you. Just before I got to it, Andy was on the ball and triggered today. Triggered today, we'll talk about that. And then we're going to check in on kind of a working strategy I've been talking about with the last few weeks. What's working, what's not. Back test it just to see what the best data points show us, and then we'll. I actually have about 9 or 10 ideas again to give out. The market is giving plenty. I remember there's a few webinars where I came in here and I said, boy, I'm struggling to find even 4 or 5 decent setups. Well, what's out there right now, if you're looking for long side setups and the go-to stuff that I'm looking at, there is plenty to look at, more so than I would really want, because there's just too many good-looking things out there. And if that's, as we'll get into here in a second, that is a function of what the market is doing. And so let's do that right now. As we start this green tag up here, I could show you, whoops, that's not going to give you the true picture. The true picture is Apple has earnings, and Apple is the story of the post-market. There's the big move higher in Apple. I don't really look at that. I just kind of look at that green tag. I can always see where the aftermarket price is by just looking where that green tag is on the right side of the chart. You can see this thing's gapping up after hours. So Apple will probably drag the NASDAQ a little bit with it, not much, but a skosh. And then the S&P spiders that we always start with, not hardly gapping up at all. Apple's not really a big function. It's not going to move the needle much in the SPY. But what is happening in the SPY is, I keep forgetting to save this chart, is interesting. We have this higher low building the higher base camp, and then we have this, basically, let me zoom out and make sure that's correct. We have this bottom level here, which is our prior high, which we blasted through, came back, bounced off of it, and then now we have a very significant 3-day bottom base that we have built here. Just like I talked about yesterday in Jamie's webinar, we've got obvious higher highs and higher lows along the way, building what is known as a trend. And then Andy and I talked a lot last week as well about the nature of markets that are healthy, markets that are not climbing a wall of worry, markets that are not watching something, markets that have a fear index of like 0, markets that have low volume like we have in the summertime right now. So it's kind of a ripe recipe, a perfect storm for one of those slow summer grind hires that Andy and I have seen over a select few of the years, going back the last 22 years or so. And we could be seeing that. And if that is the case, we don't really get strong pullbacks in those types of environments. We just get kind of a narrow range of candles. We haven't had really very many big candles here in the last few days, but it's the kind of thing that can just grind higher. And all I really care about is where is the 10 period and where is the 20 period as we grind higher. I would like to, as usual, expect to see prices stay above these 2 moving averages. And as long as they do, they can pierce them during the day or the morning, but as long as they revert back up like this one right here, like a cork underwater, letting it go, it pops back up and closes with a nice tail. As long as they keep doing that above that moving average, that is the momentum gauge. This is going to gauge what the price action is doing. And as long as they continue to close above that momentum moving averages, the path of least resistance does remain higher. So there's no bear case whatsoever to be made here. We're at all-time highs. We were at least a couple days ago in that range, in the neighborhood still, 10 above the 20, 20 above the 50, and way above the 200. We're not extended by any means. There's nothing that says the price action can't just consolidate sideways here and let these moving averages sort of force the issue into a push higher. I mean, I would be nervous if the price action got way too extended, which it did back here. It got way extended. And I talk a lot about how you start to get a lot of daylight and a lot of distance, between the 10 period moving average. Well, back there, that example ultimately did work itself out by going sideways. And then the sideways action results in higher prices, of course, when we're talking about continuation patterns in the path of least resistance. So again, these are the crucial levels. I think everything remains okay as long as the price action does not threaten or close below that upper line right there. We need to hold that line in the sand, the higher low that we're currently working on, and that's in the S&P. Same story in the NASDAQ, just a slow grind higher with the moving averages slowly forcing the issue here. I think if we were to draw a line, for the most part, it gives us a perfect, look at that. This was our prior all-time highs back here in the NASDAQ, and as we zoom forward, what did that portend these 2 days here last week? Solid footing. So prior resistance became solid footing. This is a very significant pivot line. Therefore, we do not want to even think about seeing a price action close below this line right here. Yeah, James, we can come back and hit on that. Certainly, a question about how to create a possible watch list. We can certainly do that. I want to go to the Dow first because the Dow has remained very attractive. It's not pulling back. It's not got deep pullbacks, but it just has this extended, long-looking seabird bill here. It's just itching to break out again. I think the path of least resistance. I'm surprised it quite hasn't really done it yet. It closed above the 20 today, but here's where it gets kind of goofy. Our old friend Russell 2000. It's just been a really annoying little creature lately. I could take out today's candle, and we had a real nice little tight range developing here, back and forth. And then today, market decided to gap these low-priced, low-cap stocks, Russell 2000 stocks down, and then didn't even blink twice and just buy them back all day long, which created something that I have not seen in quite some time. I don't even know if I have, Andy, and that is the elusive triple engulfing pattern, meaning today's candle took out the highs and lows of the last 3 days in one single trading day. That's really odd. Okay, so great.
For an ETF, for sure, yeah.
For an ETF, yeah. Stocks will do that all the time.
Right.
Not all the time, but they'll do goofy shit like this all the time. But ETFs, I don't expect this from an ETF. All right, so whatever, we can go down that road, but we won't go down that road. What we'll say is, what does it mean? Well, an engulfing pattern like that with a green color, it means it probably wants to go higher. I just don't understand why it had to take its own sweet time and do all this nasty, crazy stuff.
Yep.
In hindsight, I really thought we were gonna have a nice follow-through day the next day off that candle right there. Very
at least a tight doji inside, yeah.
Yeah, or at least a day of pause, a tight doji, and then a go. But these last 4 days, I mean, for an ETF, I don't know if I've ever seen this before for an ETF. You have to think about all the components that make up the Russell 2000. All right, 2,000 small cap stocks. Well, for whatever reason, in unison today, they all gapped down. And I might tie it together when we go to the setting of alerts today, because I had probably a record amount of alerts on my washout balance today, Andy. And I don't know why, but a lot of stuff got really crazy on the open today.
Wow. Maybe the time of year, they shenanigans. I don't know. Yeah.
Well, so again, yes, we can laugh and goof and joke about this IWM, but what does it really mean? Well, it's a giant green engulfing candle. It probably means it's now ready to go. So didn't quite get the trade of the week that we wanted. Trading it in the last few days hasn't really worked either. But now that everybody's been washed out and is annoyed with it, it'll probably gap up and run like crazy tomorrow.
Yep.
All right, so if you want to add anything, Andy, go ahead.
No, I totally agree with you. You think about it though. Well, first of all, what's leading what? It really, when it comes to ETFs, I think they actually lead stocks around. So it's so in other words, you got all these funds that are going out buying, IWM today, and of course, then they have to have the allocations into the stock. I don't know. It gets very confusing, but yeah, that kind of price action. Yeah. And as far, I don't have anything to add. It's the same old story with the SPYs. No bear case scenario at all. Looks like we just want to keep just grinding higher with very little enthusiasm when we do go through highs, But
exactly. And 2 steps forward, 3 steps forward, 2.3 steps back.
Exactly.
As we'll take care of James' question before we hand it over, just so I can get and clear that. Okay. His question is, can you create a watch list? So that would be a T window, right? That will monitor in that list for volume spikes over the recent 2-minute real time. Okay, so the first thing you said was 2-minute. So let's go to new T window and see what our options are for filters. And volume, what do we have? Do we have 2-minute volume? We don't. I don't think we have 2-minute volume, do we? We have volume 5-minute. We don't.
I think we have a 2-minute. Just
custom.
Don't put volume. Just put 2-minute. I think we got like a spike or something.
2-minute range. 2-minute. There's nothing to do with volume.
You're not going to have anything on volume, but you would have you could do a range where if you're looking for movement. But Steve's right. You have to, if you're looking for volume, it's going to have to be, I guess, on a 5-minute.
When you could try and approach it from a different angle on spiking volume, but it sounds like you want a list. You want to create a watch list. And when you say that, I always think, you're talking about a T window, a top list, because this gives us a watch list. All right. Here's what you could do. I mean, you could go to the My Like Symbols channel and grab this T window if you don't already have it. And if you don't understand how to use it, you basically use the heart in the window. So any stock that you see, you heart it. What I'm getting at is maybe it could be a two-step process for you, James. This being the second step, finding the stocks that you like and then hearting them to put them into this top list window. But step number one is probably going to have to be an alert to find them. So volume spike, let's see what we have for events and volume. We have a 1 minute volume spike, which is interesting. What do we have for 2 minute volume? Anything for 2 minute range?
Now what you could do, you could use the 2 minute change. So in other words, you could use a, but that's still not alert though.
Change in 2 minute right here.
Yeah, you could do that, but that's not an alert.
Well, what you could do is you could say change in 2 minutes, add that filter.
Mm-hmm.
Hide
like
unused.
0.5% or something.
Exactly, but then you're going to have to use like a new high or a new 5 minute high. You could use a new 5 minute high, but that new 5 minute high within there has a filter, or you could use new high on the day, whatever you want. But my point is, figure out what the event is, and then you could use that 2 minute percentage change.
Now, and remember, if you have a watch list, probably if you don't have to be alerted, I find that when I have a watch list, it's better used in a top list, just because I can use the power of columns. I can put the columns in there. I can put a change in 2 minute column. I can put volume in the 5 minute column. That's what I like to use when I'm using a watch list. Obviously, you can use an A window or a T window, but
unusual number of prints might be a fun one to explore, James. You could try unusual number of prints for your event, and then go in and grab the 2 minute change in 2 minute change percent, and whatever you would expect to see, like a 1% move over 2 minutes or 0.5% move over 2 minutes. That's what you would put in the minimum column for that filter. Mm-hmm. So your event is going to alert you to, hey, there's a bunch of stuff just happening. It's always going to correspond with higher volume. Unusual amount of prints. It's just a different way of explaining it. So that would work for you, I would hope. Mm-hmm. It's a place to start. The whole point, the whole drill of going through this half the time really is kind of reverse engineering and backing yourself into that stuff. James, also, if you haven't seen the stocks like this reverse engineer thing on our webpage at the very bottom, it's called stocks like this. You can type in a symbol and a time and a date. 5 minute candle is the smallest time frame you can sample though, and it'll tell you what alerts or what events were triggering at say 9:55 Eastern on stock XYZ, and you can start to see, oh yeah, okay, an unusual number of prints did show up, so I could probably focus on that. It kind of gives you a little extra way to do it. Yeah, for any stock in your list, it takes time. You got to go back and look at the time of day for any stock that you want to look at on stocks like this. It's a single stock process, and the idea is to find out what were the events that were firing at this time of day, and it helps you kind of back your way into some of these custom scans. All right, Andy, let's do the
taking it away.
Yeah.
All right, so Holly, today let's put back up the good old SPYs to kind of see what she worked. Well, obviously saw what IWM did today, but look at the SPYs. Finished down on the day about almost 0.25%. Nothing major, but when you look at the IWM, boy, you think the spiders would have had a great day, but not so much. They gapped down and pretty much slopped around, fought back, slopped around, but really nothing. Nothing to really give us any true, indication of direction, as far as Holly goes. And you can tell Holly had some shorts with the gap down. I'm thinking a lot of these shorts triggered early. You can see the times right here. Let me just do it by entry time. And as you can see, quite a few shorts. And then even during the day, some shorts went off. But interesting, just to kind of show you guys, you know, when you're in a bull market, even on down days, doesn't mean that necessarily shorts are going to work, because it was a gap down and there was no follow through. As a matter of fact, excuse me, if I short by risk off, you're going to see here that the majority of like all the shorts were pretty much all losers today. There was a couple of that finished pretty good on risk on, and no, actually just one, NWL. All the rest of them, as I'm looking here, they were just all, you know, all down the day. And if you look on even risk off, risk on, you're going to see all of our top 10 are pretty much all longs. Now, that being said, you can see over here in Holly's when those, you know, finished up marginally. This is nothing to write home about, but honestly, guys, you know, when you have them this time of year, and trust me, it's probably going to get worse going into August. Seems like the worst 2 weeks of the year, or the last 2 weeks in August. It's from my experience over the years. So be careful, because they're you know, not a lot to, you know, try to catch some earnings plays if you're a day trader or something with volume or news behind it, because you're going to see just a lot of nonsense in the price action this time of year, because there's really no volume to push stuff around. That being said, there was some really good risk, full risk, even though today, you know, pretty much gap down for some full risk. It's XLE, even though it was stopped out. Boy, if you kept your eye on this one, if you're watching sectors, this was nice little, wouldn't call it a horseshoe because it was down on the day, but still kind of has that same pattern there and going to highs. And boy, pretty much all day in the energy sectors, that was a good one. WVE, another great one there. No pain trade, I like to call it. Okay. But I'm not going to sit here and pick the winners apart when you have all these losers down here. But it's interesting that the shorts really didn't work today, none of them really, and full risk and two of the Hollies performed the best. But Steve, I'm not going to sit here because it was kind of a sloppy day, and even so with Holly, you know, when I see kind of the even number of losses as I do longs. This is not usually the case, but today, why do I have this? Oh, that was full risk on.
Well, for those that have been in Barry's room, he's really been finding value in tracking the profitable ones and following them the following day as well, putting those in the watch list. You know, you drop that heart channel, just use that for stocks that finish strong. Again, it comes up to the human and the machine. You got to look at those charts and, you know, just start to decide which ones look like, you know, they might be decent for you tomorrow. The AI kind of gives us a head start, but the way Barry's been kind of zeroing in on that first day strength, second day follow through, he's getting excited about it. Oh no.
Oh, you're not ready for it?
I thought we lost.
No, I'm just passing it back. Yeah,
I was sitting here looking at your screen and it disappeared. No. Okay. All right. Welcome back to my screen here. All right, so the next bit of business was the trade of the week. That's why we come here each week. So I honestly can't remember where we saw this.
I think it was pullback above.
You told me you saw it a few days ago. You saw it showing up on the explosive volume, and then we saw it after its earnings right here, and then it pulled back to the 50. So kind of a double-edged alert there. Extreme volume, yes, thank you, Waleed. And so it was. Here's again, I love these scenarios, and this is kind of what I write about a little bit in the ebook when it comes to earnings. And James, I know we had a little conversation there about earnings. Sometimes earnings come out and the first mouse doesn't get the cheese. And I really love it when you sit back and you just look at a few days after earnings, because if you buy it on this day, you really are guessing to see if there's any follow through. But what I really like to see is after earnings, if there's a gap, if there's an attempt to fill that gap and it comes back and does so in bases, it kind of squeezes the weak hands out and then starts to show, you know, on strength of basing. That's really where we were going into the weekend. Let me see if I can zoom back just a little bit. Whoops. Zoom in, and then 1, 2. So this is what we had going into the weekend. A really nice, slight little gap fill here from the earnings. Big volume, you can tell that was earnings day. And not to mention in the back of our minds, you know, some of the mining stocks, and whether it's steel or gold or GDX or whatever, they just kind of been on the radar lately. So even X and AKS had a pretty good day today as well. But we are getting back to Cliff's Natural Resources. They are the part of the cog in the wheel that pulls the stuff out of the ground, the iron and the ore that pulls it out of the ground and gives it to US Steel and Cliff to turn them into steel bars and things like that. But we're not interested in stories. We're interested in price action and what we see. So a nice spike up and a head fake on the volume, pullback gap fill. Honestly, I thought this thing would have taken off early Monday morning. So ratting around for a couple extra days, I was kind of surprised to pull it up and see it actually moving through the trigger when it went off midday today at 11:01. So we're put an orange bar there. We're definitely in the money. We closed on highs. Looks like after hours is still on highs. These are the kind of green bars. I expect to see some follow through tomorrow. So really hope to see some follow through tomorrow. And another example of how the second mouse winds up getting the cheese after earnings comes out. And we have an initial euphoria followed by some technical backing and filling. And then it seems to want to go sometime. So at the blush right now, I couldn't have said this morning on the open. I didn't think it might have triggered today. Kind of thought it was taking too long, but at first blush here, looking at it, speaking with you guys now and talking about it, I think it's a good looking trade, and it did what we wanted it to do. It just took an extra day, quite honestly. Anything you want to add on the
No, I agree. I also think probably the steel sector, this is iron ore, but AKS and then X kind of getting in the move with AKS today. I think it just got excitement in that kind of whole area, you know. So and obviously they probably had some pretty decent earnings. I didn't read the earnings report, but yeah, I like everything about it.
Yes, sir. Trying to think if there was anything else that was of note I wanted to say. You know, somebody sent an email and maybe they were a new trader and they didn't fully understand, but they said, well, wait a minute, 11 and risk it for 50 cents. I believe that was the, you just double check here. 10.50 was the stop, correct? Yes, 10. So risking 50 cents to make $1. He didn't really see the wisdom. I'm sure he's a nice guy. Maybe he didn't know, but he didn't see the wisdom of using that as a stop for this as a target. All right. It's about pretty simple. We're risking 1 to make 2 here. So anytime we have good,
it's about almost a 10% move.
Yeah. And then, you know, and I didn't pull that number out of thin air. You know, we just kind of go back here and actually, it's right about, what was I'm sorry, 12, thank you. I'm going back to these levels here, kind of minding those spikes. It looks like the price action didn't like spending too much time above those levels. So just kind of threw the round number of 12 in there as a price target. So always want to know what our plan and where's our out. And I think our out makes perfect sense. We have 1, 2, 3, 4, 5 lows here that we can now hopefully lean on. And so if the price breaks below those lows, there really is no reason to be in this trade below that line. So that's the reasoning for the downside. And the reasoning for the upside is this prior high back here. So it all just kind of worked out. Risk 1 to make 2 units. And that's how you're going to make money. The guy in the email, Sean had to remind him because he started getting into, well, at a 50% win clip, but even then he's wrong. I mean, you can take trades at 2-to-1 risk reward ratio. And if you adhere to your profits and your targets, even at 51% win ratio, you're going to make money.
Of course you are. You at a 45%, you're going to make money on it.
Yeah, exactly. So, all right, well, that's it for trade of the week. Cliff's Natural Resources, we'll see where we go with that. I did mention, I forgot where I mentioned it, but I'm really watching the silver. This thing looks like it wants to go again. You know, how many times do I have to say the same thing? Price gets too far above. We looked at this earlier in some other stock. It goes sideways, resolves higher. So I really like silver. Silver miners are also doing pretty well. Pause has a crazy chart because the reason I say it has a crazy chart is because of this right here. 9 out of 10 times that's going to be a short-term top, right, Andy? There's a pattern for that. Chopsticks, I think it's called.
Yep.
Or whatever. chopsticks, and chopsticks is not working out here because it's grinding higher out of those chopsticks. So this is extremely strong sector right now, silver and gold miners, in my opinion.
Mm-hmm.
All right, so let's now pivot over to you know, what's been working and what's not working. I talked last week about this. I'll take that as an intraday alert to stocks that are jamming down on the open. Here's a great example: microchip trying to do something, jam down on the open right there. Kind of focus on the intraday stuff. Etsy jammed down on the open and then drove higher. So these are all decently strong. Oh my God, Clack, what a great day.
Mm-hmm.
So guess what? I mean, we've been back testing this thing, I think, for 3 weeks now, looking for 2-day holds. I'm trying to focus on the swing trading stuff here. I don't like day trading. I haven't liked it for 10 years. I still don't like it. So back test. Let's open her up here. And let's go back and make sure we're doing our optimization. So we'll just open the throttle here all day, wide open. Exit day after tomorrow at the open. I'll take that. I like day after when we do these swing trading back tests, I like to grab the opens because a lot of times you're going to get that gap hopefully, and then you take that gift. A lot of times you get the better price at the open after an exhausted move. Risk management is pretty simple. We are going to enable that. Maybe we'll risk 2 to make 6, risk 1 to 3. And we'll go back to full 64 days here and see what's happening. So we'll start with our base run. Looks like a pretty good server connection there. And the minute I say that, it stops. Okay, so 160 trades. Going from lower left to upper right, a bit of a congestion back here, but let's see what we got. Optimization, time of day, price. I'm sorry, we're starting with price first. All right, let's do $10 price increments. Not really seeing a whole lot except, let's stop it here at 79 bucks. Say okay to that. And then the time of day, let's do a 15-minute intervals here, see if we can discern anything. And yeah, I can discern that it looks like most of the trades are occurring too early, so we're gonna wait till 8 o'clock my time and run it all the way to 11 o'clock my time. That's kind of the way it's been lately. So back test 8 to 11. Yes, Waleed, I prefer swing trading to day trading. The algorithms can have day trading, as far as I'm concerned. All right, now we're going to get our comparison run here. And pretty good comparison, just knocking out the time of day for the most part. We went down to very few trades, only 20 trades, but we have a real quality example here, quality of trades. So $1.03 average winner, 45 cents average loser, 62% win percentage. Remember, we're running this on swing trading time frame. What happens, you know, if we mix things up a little bit? What happens if we went for a tighter stop, we could say, you know, and tried to get 5%? And maybe we could also say, what will we do if we went one more day at the close? You know, these are just little things you can try to mix up on and see what happens. But after this, we'll move on. All it's basically telling me is that this thing is still working for the most part. And the biggest notification, oh, that just went to hell right there. I just went to hell. So I think we want to stay within 1 to 2 or 3 days, no more than 3 days. Things start to really go to shit in swing trading after you've had a good move, if you stick around too long. What was I going to say? Well, yes, the point is what I think I learned there is the trades that are coming through early in the morning are head fakes. That back testing optimization told me to wait 90 minutes after the open for the more quality stuff. So I'll keep that in the back of my mind. All right, so that is that. Now remember last week we did give out some price alerts and they've been working. So let's take a look. We got some more again this week. Fate never triggered, but guess what? Look at that fate. It's nothing's happened yet, so we're gonna carry that one over to this week. But going from top to bottom, NVTA, big close today, up 8%. RGEN, I like that one a lot because of the low float. Yeah, 43 million low float. Beautiful move there, almost 5.5%. Open the pod doors, Hal. Just grinding higher. QTNT decided to make its move today, so it spent all week and it doesn't look bad. I would just keep that one going. There could be some nice follow through on that one tomorrow. And then we're going to start to get into stuff that didn't work. I mean, it triggered early and stayed in profit for a while, but gave it back today, it looks like. And then ZS in the profits for a day or two and then gives it back. This kind of proves our point here, what we were just back testing. What runs for 3 days turns to shit on the 4th day. And there it is right there. So, you know, if you're swing trading out there, I start to get a little nervous. I don't count the days that you're waiting, you know, like in Cliff. I wouldn't count Friday and yesterday as a day. I count this as day one right here, okay? So day one, I'm expecting some follow through into day two, and then maybe we can start see what's going on. We'll see. All right, so that closed. We just took a look at last week's. They triggered. Didn't look like there was really any trouble. And, you know, this is because this is what the market's doing. If the market was puking and going down, this stuff wouldn't work. We'd have to be going back to the drawing board. So, you know, the whole point is that it's still working. So we're going to stay at the drawing board. We're going to stay with the well that's working. So let's clear out the old price alerts. And again, I'm going to keep that one in there working. Right click, delete those. We're just going to edit this one real quick. So it changes the date, I believe. No, it didn't change the date, so we're going to get rid of that one too. Just start fresh. All right, so the first 6 or so are coming from the A table, and as I said earlier, there's just way too much stuff in here right now. There's a lot of stuff to look at. And Andy, you've not seen this, but you know, I've had this washout bounce. I've stared at this thing for days where it doesn't show me anything. Look at this.
Wow.
Look at that.
Crazy.
That's an anomaly as far as I'm concerned. I mean, look at how many things were spiking down on the open.
Man.
And
look
maybe this
one.
is. Oh, I just crept into that one. That's a nice looking chart. We got that one. Don't worry, we got that one marked up. But this is why I was going to try and mention another spike. Why the freaking IWM might have opened like that. Everything went crazy this morning on the open. I don't know. It's just,
it's weird.
An explanation. I've never seen that many returns in that scan ever. All right, so those are the 2 that I'm picking from. The first 6. I'm going to go in order, and we'll just start with that fate since that was a carryover. We'll go ahead and remark that. It looks like we're going to. God, nah, I think we wait. I think we wait for the big signal, not try to get too cute here. So 2281 for fate. 2nd week in a row. It's ready. MCHD, or is it MCHP? Yeah, microchip. We looked at that one earlier too. It was on the. Funny how sometimes these blur the lines, or these have a little bleed over, crossover, don't they, Andy? Today. What am I getting at? M-chip was supposed to be on this thing today. Why is it not on there now? It's weird.
Yeah, I remember seeing it.
What's going on there? Hang on a second. Real time. Back to history. I didn't change. Oh, yes, I did. I changed. Remember, I changed the price. That's what happened. See, you start into a corner sometimes too much. No, it was a different one. Okay, so now we can go to drive my point home. M-chip overlap. So it had that drive down this morning that I love. All right. So that's what we're going to kind of focus on this one. We're not going to wait for it to get back to highs. We're going to wait for it to take out today's highs. I think that might have been the move right there. So 97.19. No. Yes, 97.19. No, 97.38. Jeez. All right, we're going to try and catch, assuming that today was the shakeout day that it tried to get all these people shaken out. If it can move higher, it should have some follow through. Shake Shack, I heard you mention this one today, Andy, while we were trading. I think it looks like pretty close there, 76.49, 76.38, so we're going to go 76.50.
Check the
Score?
No, the earnings date on that one.
Yeah, thank you for doing. Okay, so 475. Yeah, let's put a note in there in all caps. In Shake Shack. Thank you for that. Edit price alert. Earnings. A few days away. So that's why we have notes. IPHI. Beautiful sideways action. Took a little dip and met the moving average perfectly. We're going to go above yesterday's high, which looks like 62.57. Oh, there's earnings in that one. Way too close. I'm going to take that one off. That's too close. Can't even do that one. 4 or 5 days is okay, but 2 days is too close. That's not going to work. So scratch that one. And then we've got HQY. Similar kind of chart, just a different name. I would have liked it if it touched, actually tagged the moving average today. I would have liked that, but it didn't. 81.99. All right, so we're just going to go to 82, and maybe it'll tag that line tomorrow, and then come back up for your highs. But we're just going to do 82 on the screws. And then lastly, from this scan, the A table, I'm going with Square. And Square has earnings too. Okay, we're not going with Square. While I'm talking about it, Andy, one of the things I forgot to mention is, I know you know how I feel about this, but Goog had earnings. Good earnings. Apple had earnings. Good earnings up here. Twitter had earnings. Pretty good earnings. For some reason, Facebook is the only one of that bunch that couldn't get out of the box. You know, this was Facebook's earnings day right there, big clunker, and it's been slowly leaking ever since. So I found that kind of interesting. Just a side note.
Yep.
So all right, I've had to DQ 2 of these price alerts here due to my fact that I missed those earnings. So now we're going to move over to what I told you was the anomaly of the washout bounce. I don't think there's a lot of duplicates in there. That's just a lot of. Wow, that's a lot. Yeah, there's a couple duplicates. But the first is going to be EQH. And of course, we'll check for earnings. Earnings date in 7 days. We're good there. Look at that opening drive down right to the 20 period. Ran all the stops, just like we always talk about. And then close on highs, just to piss everybody off that got sold out on a good till canceled order while they were driving to work down here. So I love this action. This is the kind of stuff that's like it like cocks the trigger, and for lack of a better word, it like, you know, resets the button and ready to go. Pull it back and pull the trigger when you see that. I like that. So therefore, we're just going to move up to the highs here from a couple days ago. It's going to be 22.92. Oh, nailed it. All right, earnings 7 days away. I'm going to put that in there too, because some people might miss that. This was EQH, edit, earnings in 6 days. 2 more to go, both from the washout bounce. These are all going to have similar washout candles, which is what I love, and boy, did we get a lot of them today. VC, really nice washout candle, but look at how it's been forcing the issue on the daily chart. This is what caught my eye. It is just pounding like crazy on this 200, and it wants through, and it tried to run a lot of stops on the open today. So I'm going to use yesterday's high, which is kind of right there at the 200 as well. We'll call it 68.48. Nailed it. And then lastly, QRVO. There's our drive down on the open, just what we're looking for. A beautiful stock in an uptrend. Got ahead of itself. A lot of space in between there. Sideways action is what we like. And what do you know, on this one, we actually did get the OCD robots to go down and flick the light switch and touch that 10-period moving average. Something like EQ says, Waleed, stop at the open. Would you take a trade intraday? Well, yeah, I mean, that's kind of going back to this. I'll take that. We get a lot of overlap on this. This is looking for stuff driving down on the open. So if I saw this on the open, Waleed, and again, remember I said I'd like the chances after at least an hour or so. So 1, 2, 3, 4 candles. There's your 4th candle right there. Looking back on this, I would say, yeah, I'd put my stop at the low of the day right there and hope for something like that for the remainder of the day. Where I think it proved on that back testing is that if we start guessing too early in here, some of these might fail. And so there's definitely a good strategy there, but I think there's a sweet spot in the time of day to find the ones that are going to work and the ones that are failing. But we're talking swing trading here, and everything just lined up. I think it's going to have some follow through tomorrow. 75.80. Okay, so do you just do the high of today, Andy, for follow through, or do you do the high back here? Yeah, I think you do. I think you do.
May trigger, but
oh, it may trigger after market. All right, let's just stick it up here a little bit because I can see after market right there. Go ahead and knock it right there. All right, so there is our, I believe, 7 price alerts. Let's see, 1, 2, 3, 4, 5, 6, 7. So we haven't changed anything up from the last month. This is the kind of stuff that's been working. Until it stops working, we'll keep going to this well. So let me copy these, and while I'm doing that, if you got anything you want to add, Andy, we can do so. If not, we can always bring Scott in and have some announcements. We do have a test drive coming up.
Oh yeah, I'm all good here.
Hovering over delete, you're not even pointing that out. There we go, share. You're supposed to catch me. Copy all. All right, going into the chat window here and pasting the price alerts for those that are here today that want it. For those that are watching online, you have to come in live to get these. I need to learn how to spell. And there's the link, and there you go. We can all get the same trigger at the same time. So that's all we've got today, myself and Andy, for the swing trading content. I'll bring up the slideshow here and let Scott come back in and walk us out with any announcements he's got.
Yeah, thanks, guys. So on the way out, we have a podcast. We just re-released a really good one from last year with Michael Noss and Sean McLaughlin. So you can get that by searching for Trade Ideas Podcast wherever you listen to podcasts and adding us as a subscription. And then you get the new one as soon as it comes out. We have new ebooks. Both Andy and Steve contributed chapters to them, and each one has a theme, and each one has 2 chapters. So there's 2 concepts inside each book. Go ahead and get them for free by going to trade-ideas.com/setup. Put in your email address, get the download link. We've got a code that's good for the rest of the month, which means, actually it'll be good until next week, but you want to use it pretty soon. July Highs is all caps, case sensitive, and it saves 15% off your first month or year of Trade Ideas, or any upgrade from standard to premium. So keep that in mind. You can follow Steve Gomez on Twitter at TodayTrader. Also follow at Trade Ideas, at QuantBot. Find us on Facebook at facebook.com/TradeIdeasPro. And if you have any questions, shoot them to info@trade-ideas.com. That's the best place to send everything because it goes into our help desk software. So everything's tracked and it goes to the right team member. Thanks, Steve. Thanks, Andy. Thank you all for attending, and have a good one.
See you next week.
All right, see you guys on Thursday.